Ladies and gentlemen, good day and welcome to Alembic Pharmaceuticals Limited discussion on company's Q1 unaudited financial results conference call. We have with us today Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Director, Finance and CFO, Mr. Mitanshu Shah, Head Finance, Mr. Jaisal Shah, Head Strategy, and Mr. Ajay Kumar Desai, Senior VP Finance. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. R.K. Baheti. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Thank you all for joining the first quarter results conference call. I'm sure you have got the results by now. Let me briefly take you through the financial numbers. During the quarter, our total revenue grew 18% to 1486 crore. EBITDA is 210 crore, which is 14.13% of sales, and grew by 67% before considering non-recurring items in corresponding quarter. Net profit is 121 crores. EPS for the quarter is 6.14 per share versus rupees 1.84 per share before non-recurring items of previous corresponding quarter. Interestingly, this year, first quarter EBITDA and net profit are after charging all expenditure of new plants, that is F2, F3 and F4. Till December 2022 or so, we were capitalizing them as the CWIP. The borrowings at a gross level, at consolidated level is rupees 600 crores versus rupees 630 crores in March 2023. And company has about 90 crores in cash on hand. So March 33, the number was 75 crores. So net debt equity is now at 0.11. It will be interesting for all of us to hear from Shaunak and Pranav about their respective business performance. So I'm handing it over to Shaunak for India branded business. Yeah. Shaunak?
Okay. My network is not so stable, so in case it drops out, just please continue. So from the India business, we grow at 9% to 524 crores for the quarter. For Q1, if I look at the comparison to external numbers, industry grew by 9% as per IMS, whereas our external growth is at 11%. Our performance for specialty significant market.
Shaunak, you are not audible.
Mr. Amin, your line is not clearly audible. Members of the management, I would request you all to please stay connected while I try and reconnect Mr. Amin on a different network. Just give me a minute.
One read out, Brandon.
Requesting all participants to please stay connected while we have Mr. Shaunak Amin reconnected. Requesting you all to please stay on the line. We have Mr. Shaunak Amin reconnected. Over to you, sir.
Yeah. Okay. For acute, industry reflected a growth of 10%, whereas we reflected a growth of 16%. Anti-infective industry had a 10% growth, so Alembic recorded a 19% growth. In cough and cold, Alembic's growth is in line with market growth of 10%, and our animal healthcare continues to perform at outperformance of 11% in Q1. For the quarter, the business did see a bit of softness in the back end of the quarter, partly due to the extended summer months in large parts of the country. And going forward, hopefully once with the onset of first monsoon, we should see a significant pickup in momentum going forward. I'll pass it on to Pranav now for the international business.
Thank you. The U.S. business grew 6% in rupee terms on a year-on-year basis. Our focus is on launching new products in this year and improving efficiencies and execution in the midterm. Importantly also is the ex-US formulation as well as the API business have done very well, and we're confident of both these verticals performing in the coming quarters as well. The R&D expense for us was 119 crores, which is approximately 8% of sales in the quarter. As I've mentioned in the past, we've been working on optimizing the R&D costs, and the improvements are on track. We filed 5 ANDAs during the quarter, and cumulative ANDA filings stay at 250. We received 5 approvals in the quarter and cumulatively have 184 ANDA approvals. We launched 6 products in the quarter and plan to launch over 20 products during the rest of the year. The US FDA had inspected our new oral solid dosage facility, F4, in December. We have now received EIR for the facility and have 2 product approvals from this facility. With this, all our manufacturing facilities have the respective EIRs in place. In terms of revenue, the US generics was flat at 390 crores, whereas the ex-US generics grew 46% to 266 crores, and the API business grew by 31% to 305 crores. I would like to open the floor for question and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of E.M. Lotha from Sanmati. Please go ahead.
Hello. Am I audible, sir? Mr. Baheti?
Yeah, please go ahead.
Sir, I have got 2 questions, sir. Number 1, research and development expenses, which has moderated in this current quarter. Can you update, sir, how much amount we expected to incur during the current year, FY24?
So in the past few calls, I've said that this year our target is to get somewhere around 500 crores of R&D, and I think we'll be around that number, maybe even lower.
Okay, sir. Then another one, your US subsidiary, any write-off in this quarter regarding that subsidiary, or completely amount has been written off?
No, I think no more write-offs. Everything is done.
So my last question, sir. Why tax liability is so low? It is on 120, profit before tax is 129 crore on consolidated basis, and the current tax is only 4 crore.
So 2 things. One is Aleor is no more a subsidiary. It has got merged into company. So it is now a division of Alembic Pharmaceuticals. And you would recall that in March we did an impairment of assets, which would be spread over 2 years. So that's how we get the tax, what you call deductible expense, and tax provision is low.
So can you just give how much tax we expected to pay in 24 and 25?
Very difficult. No, I mean, that would depend on how much profits I make in future. So.
Okay, thank you. If anything, I will rejoin. Thank you. Thanks a lot, sir.
Thank you. Before we take the next question, I'd like to remind participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. My question is for Pranav. So Pranav, some of your peers are talking about normalized price erosion in the US and then opportunities emerging due to shortage, etc. So, how does Alembic stand here in terms of gaining from such opportunity, or like what are your broader observation on the US pricing opportunity, etc. from next few quarters perspective?
So as you know, historically, we've always, I mean, for the last 6-7 years that we've been in the US market, we've always done well when there are shortages in the market and we've been able to capture those opportunities. So that fundamental still stays because inherently our strategy is focused on a very robust supply chain and having compliance at our facilities. So if there are shortages, we'd like to take those opportunities. Having said that, the last 3 years we've seen excess supply in the market, and with the buyer consolidation that has really driven prices down. There is a little bit of improvement over the last quarter, I would say over the last 3 to 6 months. Is there still price erosion in the market? Definitely there is this. I think it depends molecule to molecule. There were certain segments in the generics which had little lesser erosion. I think we saw some disruptions in some injectables, in some derm and some ophthalmic, which were some interesting opportunities. Of course, our injectable portfolio is still a little nascent. We just started launching it. So that's where we're seeing some opportunities. Let's see how it goes. But the erosion is still there. And as I mentioned, that we are geared up to do well whenever there are shortages in the market.
So, specifically, do you think the injectables will be interesting from your perspective, since you have new plant and you have just started supplies, etc., and how much you can achieve, say, in next 2 years or so from injectables?
So I think we're not giving a guidance on the revenue, but injectable is an area that I think there is a relatively lesser competition than the OSDs. While there are some strong players, but we continue to keep seeing disruptions in the injectable market. So hopefully it should throw up more opportunities. Right now our portfolio is still very small. We only launched 5 products from both the facilities so far. As we keep launching more products, as we have more breadth in our portfolio, this will help us and we'll be able to capture more opportunities.
Okay. Can you remind us how many filings you have done for injectables? Like you said, 5 launches, and in terms of filing, how many have been done so far?
From both these facilities, I would say for injectables, I would say about 15 to 20 filings is what we've done.
15 to 20, okay. My last question is on your other expense trend. So obviously the first quarter number now reflects full impact of new plants, etc. So should we work with this base, or we can see further expansion in cost in line with like your top line growth, etc.?
So we don't expect further expansion in cost. I think the cost would, the base is around these numbers.
Okay, so fourth quarter is base most likely going ahead.
Yeah.
Okay, thank you. I'll get back in the queue.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of A.M. Lodha from Sanmati. Please go ahead.
Sir, thank you very much for the follow-up opportunity, sir. I have observed from the results that the API business company is doing very well. There is good growth in API this quarter also, besides last quarter. So whether the company is planning any expansion in API, please?
So thank you very much, Mr. Lodha. Yes, I think the API has been a focus area for us, and quietly over the last 12 quarters or so, the API business has seen pretty decent growth. In the past, I've guided for about 10 to 15% growth in the API business, and I think we will stand by that. This year, of course, the first quarter was very good. It was very robust. Our strategy is still the same. We focus on a robust supply chain with compliances in place, and hopefully it will help our partners in the business. And that's what we've done well over there. And I think we'll continue with the API business growth moving forward as well.
Any expansion in API, sir, company is planning?
Yeah, so we continue to keep doing expansions, and over the last few years when we did capex, we've been continually expanding our facilities, and as part of our maintenance capex, we keep adding more blocks and more facilities in the same plants.
Okay, sir. My second and last question, sir, regarding 3 new plants which we have installed in the last 2 years, they have capitalized in the current quarter, sir? That commercialization of the 3 new plant has been capitalized. I mean to say the depreciation interest on these 3 new plant has been debited to the profit and loss account?
Yes. We have capitalized it, and from 1st April, we have depreciation for these 3 plants already booked in P&L for the current quarter.
Okay, sir. But this, whether production has already, product approval has already been commenced by, and the plant has been approved by US FDA?
Yes, we have launched between these 2 plants 5 products actually, and commercial production has already started.
Thank you very much, sir. Wish you very good luck, sir, in coming year ahead. Thank you very much, sir.
Thank you. Before we take the next question, I'd like to remind participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Bharat Celly from Equirus Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, sir, just wanted to, Bhaiti sir, actually, during the last quarter, you mentioned that large part of the cost which were associated with the new plant had already come in fourth quarter. So I was under the impression that all the cost was there in the fourth quarter, and the first quarter should have seen a flattish other expenses as well as employee expenses. So still we are seeing the increase. So can you elaborate what exactly has happened? Whether the cost was there completely there in the fourth quarter or not?
So you are right to the extent that from 1st of January onwards, we have not capitalized, we have not done any further capitalization of costs. We have charged it to P&L. But as the plants are now getting approvals and products are getting launched, there is some what we call revamping of manpower costs, utility costs, and so on. So obviously the cost would those costs has gone up a bit. And secondly, it also depends on the cycle of other expenses, promo expenses, and all of that. So it's very difficult to do a quarter-on-quarter cost analysis. I mean, one item of cost comes into one quarter and the cost looks big on smaller base. But broadly, I think we have now what we are saying is we are not further capitalizing any expenses, whether it is of old derma division, which is now Moga division, or of facilities. Everything is getting charged off to P&L.
So is it safe to take this as a base cost item now going forward?
No, say it again. I didn't get your question.
I'm asking, can we take it as a base for the future quarters? This cost
I think that broadly, yes. I mean, some variation would always be there.
Right. And actually, I just wanted to pick your mind on the US pricing environment. We have been hearing a lot that there have been a changing pricing environment whereby the overall pricing environment could be very softened as compared to the last quarter. So just wanted to get a sense of how you are reading the overall these line items, whether you are seeing that actually the prices have started coming down, and have you seen any material change in the overall competition landscape whereby you are seeing a couple of guys ruining their overall portfolio? Have you seen it yet?
No, actually, I have not seen any material change in terms of anyone pruning their portfolio, any fundamental change in the market. So that stays as is. I think the only thing that happened last few months is that there was some regulatory action against some facilities, I think, which has reduced some supply in the market, and these companies which had these regulatory issues had high market share in some certain products, which has caused the shortages. But I think we continue to keep seeing shortages in the US market as per the FDA shortage report, but there is still quite a bit of supply in the market. So while in terms of pricing, there is still erosion in the market, and I don't see any change. Is it less than what it was 6 months back? Yeah, maybe, but it's still there.
Is it possible for you to outline that how much was price erosion for Alembic during this quarter, quarter-on-quarter, from the quarter-on-quarter perspective, if possible?
It's very tough to say, because each product is different. In certain products, you may have pricing erosion of up to 30-40%, and certain places it may be flat with no new entrants coming in. So if I give a figure, and it's not going to be valid because you can't take it. It's not sustainable. I mean, it's not. You can't calculate. It's very product specific.
Right. But earlier it used to be like double digits. Has it come down to a high single digit, mid single digit, anything like that? If you can offer that?
It's still double digits.
Oh, that's great. Thanks a lot. I will get back to you.
Thank you. The next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Yeah, hi. Good evening, sir. So I have three questions. So first one is in the API business, what kind of growth you are looking for in this year? And I think raw material prices have seen some correction, plus energy costs has also seen some correction. So how do you see margins in API? So overall, if you can just help on how do you think API business for this year?
So the API business, as I've said in the past few calls, I expect this business to grow between 10 to 15% year on year, and I think we're on track for that. In terms of margins, our margins have been pretty decent in the API business. I think we were not affected much due to the higher price of the raw materials that we saw. I think we were covered and we had pretty okay on that. While what's happening, the margins, as the price of the raw materials comes down, so does the expectation of the finished product in the market as you have more competition as well. So I think margins we will maintain. Our API business got decent margins and we'll continue maintaining those moving forward. Okay.
And in the domestic business, as you mentioned, season has just started. There has been some delay. So how do you see the growth, given that we have built a good sales force also over the last couple of years? And also if you can guide on the margins, again, given we have seen inflationary situation in the previous few quarters, which is again moderating. So
yeah, so on the India piece, I think that delayed monsoon, I think it's one of those things that we've been seeing now for the last 5-6 years, where it changes from year to year. I think it's just a matter of a delayed onset which kind of slows things down. So I don't think from any manpower angle we have any issues, and on the acute side we haven't expanded manpower in the current year or the previous year. In the current year we haven't spent any further manpower on the acute side, which has an impact of seasonality to it. It's still early, but usually we've seen that a delayed onset usually leads to a prolonged season on the back end. So usually for the last 3 years, we've seen the Q3 has been significantly better in terms of seasonality compared to Q2. So I think maybe it's to do with climate change and realigning trends. On the margin side, we haven't seen any pressures on the margins either direction, a pressure or upside at the moment, and we just continue to see the same levels of margins going forward.
Okay. And the last one is on overall capital allocation for this year. Given that we have limited capex, so how do you see the cash flow being redeployed?
So we have said that our major projects are over. We are building a new facility for the domestic business at Pithampur, Indore, and that will consume some cash. In the first quarter, we also completed one pending line at F3, the injectable plant. That is done and capitalized. So going forward, I think capex would be largely maintenance capex. So this year, our total capex, including the first quarter, would be in range of 400 crore or so. And going forward, probably even lower.
So, sir, my question was, how are you thinking about cash redeployment? Are you going to increase the payouts? Are you going to what are you thinking from the incremental cash generation perspective?
So as of now, we are borrowing of about 550-600 crores in books. So that gets repaid out of the cash flow which we generate, and and thereafter we will look for more opportunities.
Okay, thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, given the kind of shortages that are happening on the injectable side, certain plants having had weather issues, so would you like to throw some light in terms of what could be the benefit for us on for a FY24 basis from this current quarter sales of $48 million?
So it's tough to say on the shortages how it will impact us and which products. As I said, generally our strategy has been that if there are shortages, we're in a good position to take it. But we have seen a lot of shortages in injectables, but as of now, as I said, it's still an early portfolio for us. It's in a nascent stage. We only launched 5 products. As we launch more products, we'll be able to participate in those markets as we go along. So it's tough to say how we're going to move from here onwards. What we are hoping for is this year we'll launch a total of about 20 plus products, and hopefully that will start picking up, and as we move along, we'll see more growth coming in the following quarters.
Okay, so any clarity on the, as in this 10 to 15% growth also is still very much possible, right? At least
we have not given a growth guidance when we don't give a growth guidance.
Okay. And on the animal health business, now that it's become a reasonable size, so if you could just throw some more light in terms of what the strategy would be further expand this business.
Yeah. So on the animal health side, we've seen a tremendous run rate. In the current year, we've expanded about 200 people in the animal health business, and we created a separate vertical to focus more on feed products in the animal health care, in the large cattle space. We continue to see very strong traction, and we have some good launches lined up in the non-antibiotic feed space, as well as in terms of probiotics, and in some mainline veterinary products. So we're very bullish on this space, and we continue to look at growing it organically as we with the same momentum, and hopefully pick up some upside on this business.
Understood. Yeah, thank you.
Thank you. The next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. One question on depreciation. We have seen a quarter-on-quarter dip, while you are saying that, we have started capitalizing all the plant expenses. So just want to know the reason why there is a dip and why that is equal to your earlier quarter amount of depreciation when there used to be capitalization.
Rashmi, that is largely on account of the Aleor effect that we had in the previous quarter, which does not continue in this one. So that was the last quarter, Q4, where we had Aleor amortization.
So this will be the right base to take it for the full year, right?
Yes. Yes.
And your other income seems to be pretty high, quarter on quarter as well as year on year also. If we see, does that include any forex income or anything? If you want to, explain about it.
Yeah, you got it right. Actually, for us, it's an operational income only, but accounting standard classified as other income. This is forex gain.
Okay. And any ballpark number can you give on the tax rate, because it is very low this quarter? For the full year, earlier you had guided 17 to 18%. Should we model in the same number as of now, or you see that it should be lower than the number which you had guided?
So, in this year, actually tax rates are likely to be lower because the impairment expenses we are going to claim as a deductible expense.
Okay. Any ballpark number which you can guide on that thing?
It would depend on the total profit and minus the impairment. So, it's like giving guidance on the profit, which I'm not giving at this moment.
Understood. And on FY25, the tax rate would clock back again 17 to 18%, right?
Sorry, going forward?
Yeah, going forward.
Yeah, you're right. That will be back to max.
Okay. And with the current operational expenses, our EBITDA margin is now in the range of 13 to 14%. In the next few quarters, will it be sustainable, or we do have scope for expansion from the current level?
If the sales grows, because fixed overheads are likely to stay at current levels. So if the sales grows, which we hope will, the margin should expand.
Okay. All right. Thanks. That's it from my side.
Thank you. The next question is from the line of Sandeep Raj from Oculus Capital. Please go ahead.
Good evening, sir. I had questions specifically on the injectables. When can we expect revenue generation from the injectables?
It started already. I think, as I said earlier in the call, we've launched about 5 products which are from the injectable facilities, 4 from the onco and 1 from the general injectable. So revenue started, and as we launch more products, it'll gradually ramp up as well.
Okay. May I ask how much was the revenue for quarter 1?
We haven't given that. We haven't disclosed the breakup. We don't disclose it facility-wise.
Oh, okay. And regarding the pricing scenario in US specifically for injectables, how is that doing?
I think it's tough for me to comment because it's still a little early for us. It's, as I mentioned, just the last quarter was the first quarter that we started launching products, and 4 or 5 products is not a large enough set to give an analysis. I think hopefully by the end of the year we'll be able to give you a better perspective on the injectables as well.
Okay, sir. Got it. Perfect. That's all from my side. Thank you.
Thank you. The next question is from the line of Bharat Celly from Equirus Securities. Please go ahead.
Yeah, hi. Thanks for the follow-up. So just wanted to get a sense on gross margins. We have seen a sharp expansion sequentially. So what exactly has led to this?
So gross margin is a factor of product mix. I think the margins in our case, actually we have been maintaining this gross margin more or less over the last few quarters. The margin dependency is more on overheads. Because of increase in overheads, the margins have gone down, but otherwise gross margins are at around 70% plus minus couple of points.
Have we seen any softening of raw material prices which would have helped us during this quarter?
Not really. I think the raw material cost for us has been fairly steady.
Okay, that's helpful. Thank you.
Thank you. The next question is from the line of Jainil Shah from JM Financial. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is on the US business. We've been launching new products from our new facilities. When do we see this business becoming profitable? Any meaningful launches that you would like to call out?
So this business has always been profitable for us, and we don't really give a disclose vertical-wise profitability. But as we go along, hopefully we will have more launches. As I said, we're going to launch 20 products this year in the US. So that'll help build up. The other thing is we've seen a reduction in R&D spend, which used to be almost 600-700 crores, has come down to 500 crores this year. So that'll also help the margins.
And what is our margin aspiration, 2 to 3 years down the line? Where do we see that heading?
No, actually it would amount to giving guidance, which currently we are not, because we still need to test newer facilities, newer products in the market. But aspirational margin, without really linking it with our current performance, would be back to 18-20%.
And is it fair to assume that 1Q margin would be bottom and we could see improvement going forward?
I think I already responded to this question that the overheads largely remains fixed, and if the sales growth is there, margins would get better.
Okay. Thank you so much.
Thank you. The next question is from the line of Nitin Gandhi from InnoQuest Advisors. Please go ahead.
Yeah, thanks for taking my question. What is the asset turnover plan for injectable facility?
Too early at this point in time to,
No. When you designed the plan, historic, what was in your mindset? That I'm not asking what is current expectation.
Very difficult to put it in US environment because a product could give you like $100 and same product could sell for $3. So it's very difficult, right?
Okay. What's the amount capitalized for injectable facility?
So for all the three plants put together, it was around 2,000 crores, of which pre-op was around 1,100 crores, which got impact last year.
Okay. Thank you very much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. The next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Just one follow-up question on the U.S. business. Like you said that the price erosion is, still in double digit on an average. Can you just specify for the sartans, where do we stand? Is it higher than the average price erosion for your portfolio, or the price erosion has slowed down in that?
So as I mentioned, it's very tough to say product specific how the erosion moves. Every time you have a new entrant or you have someone trying to take a market share, so it's very tough to base it or just extrapolate from that data. So I just said generally what we're seeing across the portfolio is it's a double-digit portfolio. It's a double-digit erosion. And it's very tough to single out a sartan or particular sartan. In certain cases, there may be a new entrant who is trying to get more aggressive. In certain cases, there aren't. So it's very tough to give a general answer to this.
Okay, sir. That's it from my side. Thank you so much.
Thanks, Rashmi.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. R.K. Baheti for his closing comments. Thank you, and over to you.
Yeah, thank you very much, everybody, once again, and wish you all the best. We'll see you all in next quarter call. Thank you.
Thank you. On behalf of Alembic Pharmaceuticals Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.